Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, December 9th. Firstly to the Euro US dollar, and here we've seen very strong buying in this market today. The previous day's trading we saw a change of trend to the upside. We saw the buyers take control of the market and on that change of trend and form a fairly large white body candle in comparison to the previous two black body candles. This suggested that the buyers had found some solid upside momentum and suggested that there was a very real possibility of some strong follow through off the back of that build of momentum, and we have seen today the market breached through the 109.02 level of resistance. Fairly large white body candle today, buyers in control, strong commitment to the upside, finding some resistance just above this 110.15 level. This has been a previous support level and previous resistance level in the recent past, and we do need to watch the market very closely and watch whether we do see some strong follow through in the market test to this next resistance level at 110.50. At the moment in this new candle we are seeing some minor selling coming in, and the 110.15 level is actually holding a support, so that's going to be crucial. But with this solid build of momentum, it does suggest that there is good potential for this market to continue further to the upside. Now, over the next couple of days, however, there is a possibility of the market interacting with the Ichimoku cloud, and it does move lower over the next day or so, and it will be meeting the 110.50 and the 110.15 level and strengthening the potential resistance in that area. So if the buyers are going to trade this market higher, they will probably need to do it in the next day or so, but even then they're likely to find strong resistance up at 110.97 with the Ichimoku cloud trading around there. In terms of Ichimoku, still a bearish market in the longer term time frame, but that is no longer supported by the Chica span. Today it's within the corresponding price action, but the Chica span is also failing to support the bullish activity in the fast term and medium term time frame, with the market trading above both the Kijun-sen and the Tenkan-sen. The previous breakout above the Kijun-sen was very impressive. The market retraced and found support at the Kijun-sen, and it does suggest that the market has certainly transitioned into a strong uptrending phase in both that medium term and fast term timeframes, and suggesting that there is a possibility of the market eventually breaking out through the Ichimoku cloud to transition into a strong bull phase in the longer term timeframe as well. But we can't preempt the market. You have to watch how the market reacts around firstly these levels of resistance just close by overhead, but also the Ichimoku cloud. To the hourly charts with the Euro US dollar, and here we've seen strong bullishness in this market all day, opening above the middle pivot point level and each of the Ichimoku indicators, selling off in a minor way early in the trading session to find support within the cloud, and then bouncing off there to achieve all of the targets with the pivot point resistance levels. And all of that time the Tenkan-sen has been holding as very strong support on each occasion that the market has attempted a sell-off. Those sell-offs have been rather mild, and that was testament to the strong uptrending price action in all three timeframes based on Ichimoku. We are looking a little overextended in price action away from the Ichimoku cloud now, and we are seeing the market attempt to retrace. So it wouldn't be untoward to suggest that we may see the market test through the Tenkan-sen, trade back to test support at the middle pivot point level at 109.82, and even test to the Kijun-sen, or possibly to the first pivot point support level around 109.22. The possibility of the market testing through that first pivot point support level is a reality, and we should be watching the top of the Ichimoku cloud, which varies throughout the trading day from about 108.71 up to about 109.68, and we're likely to find strong support around those areas. Not likely that we will test to the first pivot point support level at 108.18. In the unlikely event that we do rally, we do have potentially strong resistance at the first pivot point resistance level around 110.85. To the US dollar, Japanese yen, and off the back of the build of downside momentum for the previous day's trading, we have seen the trend continue to the downside today in a rather extreme candle, very large black body candle, one of the largest candles that we've seen for some time here. And this is something of an extreme trading day, and we don't tend to see strong follow through after these extreme days. And if we look at this current candle as it's developing, this new candle for this new session, we are seeing some indecision, with the market attempting to rally through 121.52 resistance but being rejected from there, but also finding support at 121.30. For today's session that has closed, we have also found support down below 121.30, so that's going to be an important area. In terms of Ichimoku, still a bullish market in the longer term time frame, but bearish activity in the short and medium term time frame. And if we look at the Chica span, it is still just above the corresponding price action. That little kink there is reflecting what's happening in the market that is still trading. So we may see, depending on how we close in the new session, we may see an end to this bullish indication that the Chica span is giving, but still if the buyers do come in solidly and close above the highs here, then we will have the Chica span continuing to support the bullish activity in the longer term time frame. And to the hourly charts with the dollar yen, and pretty much the inverse of the euro US dollar, and we saw the market finding resistance within the cloud early, testing both of the pivot point support levels, firstly around that first one, and up until about halfway through the session it was holding, but then we sold off in a strong way down through each of the remaining pivot point support levels. The third level was breached in a very strong manner, and breaching through the third is quite a significant event and suggests a lot of volatility in this market, an extreme day, and we don't tend to see strong follow through on extreme days. So I suggest that if we do see any continued selling in the US dollar Japanese yen, the extent of it is likely to be the first pivot point support level at 120.65. Not sure if we can reach 119.92, but the possibility of the market rallying is quite strong. And firstly, we would need to trade in a bullish manner above the Tenkan-sen, which is around 121.50, and if we do that, we should be watching the middle pivot point level around 121.83, and then the Kijun-sen around the 122 region. Very real possibility of the market trading to the first pivot point to resistance level 122.56, but we are looking rather overextended in depth of price action away from the Ichimoku cloud, so a retracement is a very real possibility. To the Aussie dollar, US dollar, and for the session that has finished trading, we saw a continuation of the trend to the downside. This final candle on the chart is still currently developing, but we are seeing a lot of bullishness, and it has confirmed a couple of types of Japanese candlestick reversal patterns. Firstly, just analysing this candle, we have the large shadow on the bottom representing very strong price rejection below 72.06 support, and also below the Kijun-sen, which held for the previous day's trading. We've also seen the buyers take control away from the sellers, and that set the market up for the change of trend. But also it was a potential type of hammer pattern, and also a potential bullish Arami pattern, and we have seen confirmation of that in a very strong bullish manner today. For today's candle, it is currently developing. 72.34 is held as support, and we have tested all the way through to the 73.24 resistance. We have done a lot of work early in this candle, and I suggest that 73.24 may be the extent of the trading today. If we do trade higher, we're unlikely to trade through 73.74 resistance. And to the hourly charts with the Aussie dollar, US dollar, and we did see early selling in this market, testing down to the first pivot point support level. There wasn't any strong follow through down through there, and we did see the market rally back up to find resistance around the bottom of the Ichimoku cloud, and then we finished the trading day within the cloud, and that suggested there was potential for the market to transition into a bull phase. That strong downtrending price activity that we saw with the market trading below the cloud had finished once we saw the market trading within the Ichimoku cloud, and now in this new session we have seen the market breach in a strong bullish manner through the top of the Ichimoku cloud. Normally we'd like to see a strong bullish follow through, but the strength of the buyers in this breach has been very strong, and in 1 hourly session we have traded significantly through the cloud, trading up through the second pivot point resistance level. There is a possibility of us testing higher and reaching the third pivot point resistance level. It's about 73.62. But if we do see the market come off and some profit taking, then we should be watching the top of the Ichimoku cloud about 72.70 to hold as support. Next to cable, the British pound US dollar, and here for the session has completed trading. We have seen buyers coming into the market strongly, and that was off the back of the sellers losing commitment down below the 149.78 level. The sellers also failed to continue with control as they had for the previous couple of candles, and it suggested a possibility of a change of trend. We've seen that confirmed. We've breached through the previous support level at 150.53, traded up through 151.34, and closed in a strong bullish manner up above 151.68 and above the Kijun-sen indicator. And this suggests that the buyers are very strong in this market, and with this being an extreme candle, we may not see strong follow through, but eventually off the back of this strong build of upside momentum, we could see the market trading up to 152.43. We do need to watch 151.68 to hold a support, and then also the Kijun-sen indicator around 151.50, 151.48 may hold as very strong support. To the hourly charts with cable, and here we saw the market trading down below the Ichimoku cloud at the start of this session, and it has completed. We saw the middle of the pivot points around the 150 level holding a support, and with the Kijun-sen and Tenkan-sen trading around there, it strengthened the support. And we've seen the buyers come in solidly and trade the market through the Ichimoku cloud to change the trend in all three timeframes. We now have a bullish market in all three timeframes on this new session. We have seen the market testing the Tenkan-sen, and that is crucial. Tenkan-sen trades roughly about 151.77. If that fails to hold, we could easily test down to the middle pivot point level around 151.25, or to the Kijun-sen around the 150